I'm Charlotte McLeod with the Investing News Network, and here today with me at the Canadian Investor Conference is John McCoach, President of the TSX Venture Exchange. Thank you for joining me today.
My pleasure, Charlotte.
Great. So to start off, I wanted to ask you about the TSXV's performance so far in the first half of the year. Were there any surprises for you?
Well, the market's pretty much been flat for the 5 months so far this year, but it's not so much a surprise, but I certainly would like to have seen the market perform better. Natural resource companies, particularly early stage mineral exploration companies, and more recently oil and gas exploration companies have definitely been having their challenges.
Okay. Now, also looking at the first half of this year, one criticism I've seen come up about the TSXV is that it's too easy for companies to retain their listings, with the result being that companies that are maybe not worth investors' time. So what does it take for a company to be delisted from the exchange?
Well, we have initial listing standards on our marketplace, but we also have continued listing standards, and they've been the same for over a decade, and we have been applying those continued listing standards consistently over all that time. So those are tests like activity, working capital tests, and maintaining a board composition, these sort of things, and we review those every year, and as I say, the review process has been exactly the same. So companies, particularly natural resource companies, are very resilient, and while they may not be advancing their projects significantly when capital is difficult to obtain, they are still maintaining their projects. And so, but if they don't, we move them down to a board that we call NEX, and that's for companies to reactivate. And that board has been very successful at doing that.
Okay. So have you addressed that criticism at all, or?
We just try to address it with the facts.
Right.
You know, as I just told you, we've told others that we have these continued listing standards and that we apply them.
Okay. Now, you're not the only exchange out there. Can you tell me a little how you stack up compared to the others? Well, particularly in Canada.
Our exchange is somewhat unique in Canada and actually in the world, in that we focus on early stage companies. Our initial listing standards are quite low, but where we differ from a lot of other exchanges, in fact most exchanges in the world for early stage companies, our governance standards, our disclosure standards, and our standards about who participates in the market are very high, and in many cases higher than more senior markets. So we feel that that's the right balance. I wouldn't say we've got the balance perfect, but we strive to find that balance for early stage companies to be able to access capital, but while maintaining investor confidence. And the only way you can do those is for the exchange to review things like the suitability of the market participants, related party transactions, make sure there's the best disclosure, those sort of things.
Right. Okay, so you're definitely all about helping investors and helping companies at once.
Well, that's really what an exchange is all about. I mean, exchanges were created to help investors or savers invest in companies and companies to access capital. And that's a really important role in society.
Okay, yeah. So investors, one concern I've seen people having is algorithmic trading is on the rise, as are other kind of tech things like that. How are you addressing those concerns, or how do you make people feel better about that?
Well, electronic trading generally has been trending for many, many years, for decades. And people are finding different ways to trade the market. But algorithmic trading or high-frequency trading has actually been stable or declining. And in Canada, it's across all markets, it's only about 15% of the market share. It's much higher in other marketplaces. And on the venture exchange, it's between 1% and 2%. So it's I don't want to suggest that it's not a factor at all, because investors are competing with different levels of technology. But we are very focused on making sure that natural orders and retail investors have fair access to the market and are treated fairly when they trade the market.
Okay. Now, just to finish up, you were just on a panel over there, and one topic that came up is crowdfunding. Do you see that having a place in the markets?
I think it's inevitable. I think crowdfunding has been a phenomenon for a number of years around the world. Crowdfunding is in Canada and the United States. Equity crowdfunding will be new when it's introduced. It hasn't yet been introduced, but Some provinces just recently announced a proposal that will expect to be coming in soon. So I'm not sure how big it will be. It's got a lot of attention, but it's another option for companies to access capital. And if there's a role for us to play and we can help companies access capital as a crowdfunding platform, we're definitely going to consider that seriously.
Okay, good. Well, that's all from me today. Thank you so much for joining me.
My pleasure.
All right, and this is John McCoach from the TSX Venture Exchange, and I'm Charlotte McLeod with Resource Investing News.